We'll be diving into what a mortgage refinance is, whether or not it's a good idea for you, if it's not a good idea for you, and a little bit more detail on how that process goes. So, with that, let's dive right on into it. My name is William Singh. I'm a local real estate agent here in Portland, Oregon. And if you have any questions whatsoever, feel free to drop them down in the comments section. And if you could like and subscribe, if you find this content helpful, it'd be wonderful. Now, with that, let's dive into what a mortgage refinance is. Now, the definition of a mortgage refinance is when you refinance your mortgage, you replace your current mortgage with a new loan. So, what are the benefits of a refinance? Some of the bigger reasons why people do a refinance is typically there's going to be a lower interest rate. And when you have a lower interest rate, that means you're going to have a lower monthly payment. Now, when you have a lower monthly payment, obviously you're going to be saving up money. With this, just note that you can also do FHA and VA streamline loans where you can refinance. And this is typically when you have paid at least 6 months of the mortgage payment. So just something to kind of keep in mind as another option when you do have those types of loans. Now, a second big reason why people do this is to remove the mortgage insurance. And this is typically when you're taking mortgage insurance from an FHA loan and you're converting to a conventional loan where you have 20% or more equity. Now, this will reduce your monthly payment by removing the mortgage insurance. This is a big thing for people and can help out your monthly payment sometimes between $200 to $500 a month, which is a huge thing for people. So just something to kind of keep in mind as you start getting more and more equity in a home, that you maybe start off with an FHA loan, you can then convert into a conventional loan where you can decrease the monthly payment in that sense. Again, just one of those things where you want to make sure you're talking with a lender. And if you need any lender recommendations, feel free to reach out. I do have a wide network that does span across the US. So if you have any questions about that, feel free to message me. I'll make sure to have my contact information down below. Now, a third big reason is a cash out refinance. This is where you are using the equity from your home and you are getting that cash. So what happens is that the loan amount will then jump up. However, you're going to get that money in cash. So if you wanted to do bigger improvements on the home, then or maybe use that cash for something else, that is just another way where you can use the equity of that home in order to facilitate something in your life. Again, this is one of those things where you're going to want to talk to a lender, see what the things would work for, whether or not it would be more beneficial or detrimental for you in the long term. So if you do decide to get a refinance, then you will have some paperwork to do and also need to collect some paperwork. So this is one of those things where you're going to be getting W-2s. You will also probably getting tax returns and getting a collection of bank statements to kind of see where your assets are. Now, with this, you're usually also getting your credit pulled. This is one of those things where you want to make sure that you have a high credit score because that will also affect your interest rate. So if you have a lower credit score, you'll have a higher interest rate, which means that you're going to have a higher payment. So you want to make sure that your credit score is as high as possible so that way you have the lowest interest rate possible and thus can have the benefits of a lower monthly mortgage payment. Now, there are downsides to a refinance as well. One of those downsides is that you'll most likely be paying closing costs. Now, closing costs can be anywhere between 2 to 6% of the loan value. So just something to kind of keep in mind when you are doing this. And another downside is that sometimes you're extending the term of that loan, which means that let's say that you bought the house with a 30-year fixed loan and then 5 years later you're refinancing. You're then extending that by another or getting another 30-year loan on top of that. So that way, instead of you maybe closing your loan in 2050, you might be closing that loan in 2055. So just something to kind of keep in mind that you do pay a lot of interest within the first 5 to 7 years of the life of the loan. Now, once you get past that, usually you're starting to pay a lot more in terms of the principal, which means that you're getting more equity from the home. So just something to kind of keep in mind that if you do refinance, you might want to talk to your lender about seeing if you can keep the loan length about the same or shorter with the existing loan. So just something to kind of keep in mind when you are doing this. Now the question becomes, now that you know the downsides and upsides of a refinance, should you even do it in the first place? This is something that is of a personal matter, and there are going to be many different scenarios that may or may not work for you. And one of those things that I would talk to a lender about and see kind of what the pros and cons are. Now, this is one of those things where you're going to want to see whether or not it will overall reduce your monthly payment. And if that's a big thing for you, then you may want to move forward with that. However, with those closing costs, you're going to want to talk to a lender and see where that break even point is. So, for example, if you are going to be living in a house and you know you're going to be living in it for a long time, you're going to look at refinancing. And let's say that the closing costs and that break even time frame of the amount of time you would need in order to get that break even with closing costs and the savings you would get from that lower monthly payment is maybe 2 or 3 years out. That might be very beneficial for you in the long term. However, if you're looking to move in the next year or two, it may not be worth it for you to actually do that. So just something to kind of keep in mind, that this is very personal, and I would definitely talk to a loan officer about making sure what's a good scenario for you. Now, this also brings up the fact of cash out refinances. This is where you can pull out that equity and then use it towards another investment or potentially upgrading your own house. And one of those things where you might want to look at HELOCs as well, or some other form of financing that will help you pull out your equity that's not going to increase your monthly mortgage payment by a ton as well. So these are many different factors. If you have any questions about this whatsoever, feel free to leave a comment below or message me. You can always call or text me at 503-303-0822. And if you have liked this content or found this content helpful, it'd be wonderful if you could like and subscribe. Thanks so much for watching.